Okay, so we're starting our Canopy training session, introduction to basic Canopy client work. So overall, we went over, you sign up for your scheduling, and you do the yellow team, and this VA works. You always have to have other work to do. You have other work to do, right, Alina?
Yes.
Yeah.
Yes.
Was that a yes?
Yes.
Cool. So the yellow team doc, I'm not sure exactly what this is, but it looks like it is just to track our notes and our sessions as we build the yellow team, although I don't think we are a yellow team, we're the green team at this point in time. So we can start with the green team, and then as we go from the green team into a yellow team, we'll go into that, right? So let's make this the green team doc. And you understand what the green team is, right? And the yellow team, you understand that?
Yeah.
From the scheduling? All right. And you're scheduled for green team, right?
Yes.
And so can you add our notes to this as well? And we're also going to want to do video.
Yeah.
Can you add our notes to the doc, to the green team doc? Hello?
Okay. I'll take notes. Yellow. Yes. I'm going to add.
Okay, great. Okay, so the primary work that we're going to be doing is calculations, right? We're doing calculations for accounting, and we want to know what our gains and losses are. So right now we don't have any calculations on that. We don't even really know our accounting, let alone our gains and losses or anything like that. So that is huge work that needs to be done. So unless we actually calculate and know whether or not we have gains or losses, we don't really, it's hard to even know how much we are or are not losing. We can only estimate that we are not losing or gaining tens of thousands of dollars. I mean, there's just no way to know. Does that make sense?
Yeah.
Cool. So the other thing to understand is, well, actually, before we go into the details, let's cover the other priority. So one, you have calculations for accounting and how much money there is in our gains and losses. And then the other is calculations for trades and portfolio rebalancing. So trades and portfolio rebalancing is basically knowing what assets we want to keep and what assets we want to sell and what assets we want to buy, right? So that we can constantly be stabilized. Like basically when you buy and sell in the trades and the portfolio rebalancing is where the stability comes in. Does that make sense? Because when the Bitcoin's going up and down and all the cyber currencies are moving around and the stock market's moving around, you want to try to buy low and sell high and average it all out and balance it out. Like our goal is actually not to get, massive gains, and we're not trying to have high risk. Our goal is taking volatile systems and to stabilize them. Does that make sense?
Yes.
Cool. So the goal is to take volatile markets and stabilize them with our portfolio. So that means that we don't need to buy and sell perfectly. It just needs to generally buy and sell, when things are going up or down, so that we're able to, generally stabilize it. And then you actually have to calculate to see whether or not you actually do have gains or losses. Otherwise, you wouldn't know. It's just to know, the goal is to know how much money we have at any given time. So, and the changes in the amounts. So the changes in the amounts are the gains or losses, okay?
Okay.
All right. So other than that, there is some setup, there is some transfers and money organizing, but that's more minimal. So money organizing and general setup. So setup. Okay.
Okay.
So money organizing is like transfers, like if the money's not in the right location, or doing reminders and making sure we have the funds organized correctly. It's similar to payroll. It's like you can't make a trade unless you have the money in the account to do the trade, right?
Yeah.
And then the general setup is basically you can't send the money to that account if that account doesn't even exist. So you have to open accounts and make sure that you're at the correct exchanges to where you can buy and sell the specific assets that you want to. So the setup is the hardest work, and it's really, really slow. The money organizing is really annoying as well, trying to transfer the money around and have it be in the right place at the right time. So, I mean, if I could just snap my fingers and have all of our accounts set up and have all of the money transfer with the snap of a finger based on what my mind knows needs to happen, we would be making millions and millions of dollars, right? So the problem is not that we don't know what to do. The problem is that it's just to set up the whole system is extremely difficult so that you have the assets in the right place at the right time. That makes sense?
Yes.
And that's part of why it's all but impossible to do by myself. And I need help because it's just so much work. All right, so do you have any questions on the overview?
So how frequent do we do the portfolio rebalancing? Is it on a daily basis?
Yeah, so daily basis. This happens the most often, right? So this would be the most often. So any particular day, some days are going to need more rebalancing than others. So you just we can always quickly review the markets, see what's changing. If things aren't really changing much, then it's like not a big deal, but it's still good to be rebalancing and preparing. And now as you learn the rebalancing, you'll see that the purpose of rebalancing is not to make money. It's like the purpose of rebalancing is the more we rebalance, like if we do it every single day, we're just slowly changing our ratios, and it generally just kind of levels off the curve and reduces the spikes, right? So and it just balances everything and makes it all more stable. So the more often we rebalance and the more often we are making sure all the funds are correctly allocated, the more stable the assets are. But that doesn't necessarily mean that's the more money we make, right? It just means the more stable that it is. Okay? So money is made partly by luck, but also by large changes, and large changes happen on specific days. So there's a lot of time, like really the overall goal in terms of gains and making money is getting everything set up properly. So this setup is really important. And then it just automatically sells when everything crashes down, and then you make a bunch of money if you sold it correctly. But most of that's all done automatically. Like most of the money is all just bought or sold like automatically with the bots because it's just all happens so quickly. Does that make sense?
Yeah.
Okay. So let's go on. Any other questions about the overview? Oh, in calculations accounting, this would be like weekly/monthly. So it's pretty much impossible to calculate our gains and losses less than every week. So it's actually quite slow. So when you actually start doing the portfolio rebalancing and making trades and changing all of our assets around, you just don't know what's happening. Right? You have no idea whether or not your trades are actually successful or they're actually being helpful. And so the calculations and the actual gains and losses happen on a week-to-month basis. So you actually have to wait weeks and months to know whether your strategy and the trades that you're doing and the buy and selling is actually doing it well, or if you need to change, right? So that's part of why it's so hard to keep things stable and to know what to do, because you don't get any real-time feedback. It's all happens very, very slowly over the course of weeks and months, if not longer, right?
Yeah.
So, and then the general Canopy setup, I mean, really for each account, you only have to do it once ever, right? So each account, only once, ever, or, a few times a year, right? So the setup is very, very few and far between. Obviously, money organizing and money transfers need to happen as you are balancing and restabilizing things. So it just depends. It could be once a month. It could be once every couple months. It could be once a week. It just depends on what needs to be moved around.
Yeah. Okay.
All right. Any other questions?
No.
All right. So let's go through the first one. The first one is calculations. All right. So calculations are all about, like I'm saying, it's like a week or a month. In this case, we're talking about a month. And the most important thing to understand is that the terminology is what is called your base, right? So you have your base value. So we talk about base value in terms of Bitcoin, and then also, we talk about it in terms of US dollars. So in this case, we're doing an example where you have 2.5 Bitcoin on February 1st, right? And on March 1st, you end up with 3 Bitcoin. So that's obviously a gain. Does that make sense?
Yeah.
So the way that you calculate it is you're saying, okay, you have 0.5 Bitcoin of gains, right? And the question is, okay, how much US dollars did you gain? So Bitcoin went from 10,000 per Bitcoin to 5,000 per Bitcoin, right? So how much of a loss would that be per US dollar per Bitcoin? Right? It would be $5,000. Say again?
Is it 5,000 Bitcoin?
No, $5,000, right? So it's 10,000. So Bitcoin started on February 1st. Bitcoin is $10,000. Does that make sense? Per Bitcoin.
Yes.
And so you have 2.5 Bitcoins. That would mean you start with $25,000.
Yeah, 5,000. Yes.
That makes sense? That would be $25,000.
Yes, makes sense.
Okay, so if Bitcoin starts at $10,000 and at the end of the month it drops and crashes down to $5,000, what are the losses?
$5,000
per Bitcoin.
Per Bitcoin, yeah.
So what are the total losses?
Total losses will be 20,000.
No.
Wait.
So what was the total gains of Bitcoin?
5.
Yeah. So that would represent only 2.5, only half of that. So it would represent $2,500 of losses, I think.
Yeah, 25.
So if you have $25,000 in Bitcoin and you divide it by 2, so it's 12. Yeah, so it's actually 12,500. It's 12,500 of losses, and it's actually going to be a little bit different than that, but that's enough. So of the 2.5 Bitcoin that you started with, you lose $12,500. Does that make sense?
Yes.
Okay, so the question is, in a base value of Bitcoin, do we have gains or do we have losses?
We have losses.
No. That's incorrect.
What was the question again?
So again, we started with 2.5 Bitcoin, right? And we have a base value of Bitcoin, right? So in US dollars, the Bitcoin went from 10,000 to 5,000 over the month, but we gained 0.5 Bitcoin. Right? So we went from 2.5 Bitcoin to 3 Bitcoin. So from February 1st to March 1st, we have a gain of Bitcoin. But we gained 0.5 Bitcoin.
It will be a gain.
Yes. Do you
For
understand?
5,000.
Of what?
A gain of $5,000.
No.
Dollars.
No. Right? We started with 2.5 Bitcoin and we ended with 3 Bitcoin, which is a difference of
So it is 0.5 Bitcoin.
0.5 Bitcoin. Yes. So it's a gains of 0.5 Bitcoin. So do you understand that?
I understand that, 0.5 Bitcoin. So how much is that per US dollar per Bitcoin?
Again, it doesn't really matter, right? If we're in base value of Bitcoin, all we care about is the Bitcoins. So we're starting with 2.5 Bitcoin, and at the end of the month, we have 3 Bitcoin. That means we gained 0.5 Bitcoin regardless of the value. Does that make sense? Are you understanding or not?
I'm understanding.
Okay, so the point that I'm trying to make here is that if we have base value in Bitcoin...
Hi, Jay, you are breaking. Started breaking. I can't hear you now.
Can you hear me? Can you hear me now?
Yeah, now I can hear you.
Okay. So what I'm trying to make sure you understand is that if we're in base value Bitcoin, all that matters is the Bitcoin. Does that make sense?
Okay. Yeah, makes sense.
So in base value of US dollars, if what you're calculating is the US dollars, we would have losses of over 12,000 US dollars. Do you understand?
Yeah.
So this is where the calculations get complicated, is that some of our base is in most of our money is all in Bitcoin, which means that it's a base Bitcoin. We only lose or gain money if we lose or gain Bitcoin. The US dollar, if US dollars goes up or down or whatever, we're not directly losing money ourselves. Do you understand? Like, that's base Bitcoin.
Yeah.
Base US dollars, if it's in base US dollars, then if Bitcoin crashes, we lose all that money, right? So if it's in base US dollars, it's a very, very different situation. And then we have many different bases. So there's like 5 or 6 different bases. So depending on what base value system you're in, can depend on whether or not you have gains or losses. Does that make sense?
Yes.
So if you have gains in one base, it could be losses in another, and vice versa. So it's not just because Bitcoin goes up or down doesn't necessarily mean we make or lose money. Okay. In fact, we can, even when Bitcoin goes down, we can still make money, and we'll explain that later when we do the trades. So we're doing like shorts and things like that. All right. So let's say it's the opposite. If Bitcoin goes up. So let's say Bitcoin started at 5,000 and went up to 10,000 over the course of a month. At the end of the month, we have gains of 0.5 Bitcoin. Does that make sense?
Yes.
But in addition to that, we also have the gains of the US dollar. So if this was in US dollar base, right? You end up with 2.5 Bitcoins went up in price double, right?
Yeah.
Are you following me? So if you started with 2.5 Bitcoins at 5,000, how much is that? How much money is that? It's $12,500. No, it's $12,500. 2.5 Bitcoins, right, at $5,000 is $12,500.
Yes, 12,500.
Yes, and so if it goes up to $10,000, it will have doubled. So you can multiply it by 2. So you end up with gains of $12,500. Does that make sense?
Yes.
But in addition to that, you also made 0.5 Bitcoins, because now you have 3 Bitcoins. So the additional 0.5 Bitcoins that you made are also worth 5,000. So you had an additional $2,500 plus the 25,000 that you get. So you end up with 27,500. So that's what we call double gains. So double gains is where you gain Bitcoin, but then that Bitcoin also gains money, and then so you're gaining the value of the Bitcoin going up, plus you're gaining the total amount of Bitcoin going up, plus in addition to that, the money, that value of that Bitcoin that you got going up, right? So it's called double gains. Does that make sense?
Yes.
So our long-term goal is that we want to be focused on double gains, right? Double gains is always the long-term goal, but right now our primary focus is stability and just normal gains. All right? But it's very important to understand what double gains are because we are dealing with them a lot. All right, also there's 100 different ways to calculate all of our gains and losses in accounting. This is just one tiny little example. All right, but it covers the most important vocabulary of understanding base value. You need to understand double gains. You need to understand how, it's more dynamic than just, money going up or money going down. There's multiple variables between the different bases and the different, between double gains, single gains. There's also triple gains, quadruple gains, all of that. And then you also have, losses, double losses, etc. Okay. I think we have the whole list here. So neutral gains are stable, right? Right?
Yes.
Then you've got gains, right? Gains are also more or less stable. But our goal is really double gains. This is where we want to be. We want to be at double gains, but we can't get to double gains until we've stabilized, like neutralized and stabilized and done with our gains, right? So now, currently we're in losses and neutral. Right? We're definitely not gaining money. We're like, especially over the last month or two when we haven't been doing Canopy, bad. So anytime you go into gains, double gains, triple gains, you're also increasing your risk. So you have the probability of getting double losses, triple losses, etc. Okay? So
yeah,
overall, again, our primary goal is stability, and it's fine for all of our funds to stay neutral, and then our targeting towards gains, and then eventually what we'll be calculating is double gains, whether or not we're going through our double gains, right? And as far as like code red and where we currently are, code red is losing or not gaining thousands to tens of thousands of dollars per day or week, right? So basically, if we're not getting gains, right, even if we're not losing money, if there's still money that we could easily be getting, but we're not getting it because the work's not happening, we are in code red, either thousands or tens of thousands per day or per week. All right? And currently we are in code red because we are losing or not gaining thousands to tens of thousands of dollars per day or week. All right? So any questions on the calculations for accounting amounts, gains, losses at this point?
How is triple gain? How is triple gain happen?
Say what?
How do we gain the triple gain in our, just an example?
Oh well, that's like more high level. We don't really need to discuss that. But basically, with Canopy, we almost exclusively focus on gains and double gains. When you start talking about triple gains is getting into asset management and creating securities that are basically sellable, so you can start interacting with the actual back end of the security itself. So you can like package securities together, creating businesses, equity. So when we talk about equity, we're talking about triple gains. Right? So for example, the FQN Community Network and all of the workers in the worker organization, we're all collectively, cooperatively own our organization, right? So we're all owners and we all have equity and tokens and everything. Do you understand?
Yeah.
Yeah. So all of those assets then have value in other assets. So you have layers of assets. So if you have your base assets going up, right, it can get tripled in value in the overall assets as you're distributing the value of those assets, right? Because you have you have other layers of value that can be growing in addition to the basic double gains. Okay?
Yeah.
Anyways, we don't need to cover that because that is more complicated stuff. All right, so
Okay, thank you.
yeah, so let's go into the calculation. Wait, are there any other questions on calculations for accounting amounts, gains, losses?
No.
Okay. All right, so calculations for trades and portfolio rebalancing. Oh wait, one other way to answer your question about triple gains would be when we talk about back pay and paying everyone's back pay, right? That's all based on equity. That's all triple gains. Right? So right now we want to be able to pay our budget and our active workers. That comes from double gains. And we want to actually pay people who worked in the past who are doing nothing to support the organization, but they have equity. That would be profits. That all comes from triple gains. Right?
Okay.
So those are the profits that are then distributed.
And how about when we increase the selling price? Can it also result to triple gains?
So Bitcoin, if you're in base US dollars and if Bitcoin goes from $5,000 to $10,000, right? That would be just simple gains, singular gains. So if the price goes up and you buy and then you sell, that would be just normal gains.
Okay.
Right? So double gains is when you have the price going up and you get more of the asset. So again, in this example, the double gains, you start with 2.5 Bitcoin and then it goes up. The value goes up from 5,000 to 10,000. So you get, those are normal gains. And then you're getting double gains because you also, in addition to the US dollar gain, you also gain 0.5 Bitcoin on top of the 2.5 Bitcoin. So you end up with 3 Bitcoin. So the US dollar value increase plus the amount of Bitcoin you got and the value of that Bitcoin increasing in value, and that is double gains. Does that make sense?
Okay. Yes.
Yeah, so double gains is like, it's a whole nother level of trading and organizing and calculations, right? So most people who trade and understand trading on the stock markets and everything, it's all just normal gains. You buy the stock, low, you sell the stock high, you get just normal gains, right? When you're talking about double gains, you're talking about margin and leverage and building up the leverage. It's more high risk, but you're getting not only gains in the value of the asset, but you're actually gaining the asset as well. So again, in this case, you go from 2.5 Bitcoin to 3 Bitcoin, which you have double gains, both in the gains of the value of the asset plus the gains of the amount of asset you get and the value going up as well of the asset. All right?
Yes.
All right. So any other questions on the calculations for accounting and amounts and gains and losses?
No.
Cool. So obviously we're going to go through this in many more details, like dozens, if not hundreds of times, depending on how long you work with it. All right, so let's go on to the next topic, which is calculations, or this is the last topic, right? So calculations for trades and portfolio rebalancing. Okay?
Yes.
So again, when we eventually we're going to do the training on the actual calculations, right? This is like an overview, so that it's just getting a general sense of the vocabulary and what we're talking about, so that when we actually go through the spreadsheets, you will understand it. Because we want to make sure it's done correctly, because we're talking about people's livelihoods. So when we do trades, we use what's called indicators. So indicators help decide whether or not to buy or sell, right? If an indicator tells us to buy, then we buy. If an indicator tells us to sell, then we sell. And so the indicator is basically like it's a notification, right? It's basically a communication about whether to buy or sell. Does that make sense?
Yeah.
So there's three possible outcomes to an indicator. One is to buy or go long. So when you buy an asset, that basically means it's normal gains. When you go long, it's typically referencing to margining or leveraging, which relates to double gains, right? So buying is, single gains. Going long is leveraging, which is double gains. Or you're going to be holding or doing no position. So holding or no position means, not necessarily buying or selling, but you're also not necessarily doing anything. And you can actually hold your value and hold your position without having to go long or short. And then selling is when you, or going short is when you actually want to get rid of the asset and go back to your base. And so your base is always the most stable because whatever your base value is going to be where you reduce your any losses. Okay.
Yeah.
But again, when you go short on something, you can still be making money through a margin model, and that means that you can also be losing money. So even when the market's going up, you can still lose money on a long, right? Or short, whatever. So it just depends on how you set it up. You can lose money or gain money regardless of whether the market's going up or down. Okay. So those are the outcomes of the indicators. We currently primarily work with 28 different indicators on each type of interval. An interval explains the time frame of the buying and selling. Okay? So let me give you an example. Typically, we're looking at, let's say, a 1 hour interval. A 1 hour interval means the amount of buying and selling and trades that were done on Bitcoin within that hour. So did Bitcoin go up during that hour? Did Bitcoin go down during that hour? What was the amount of Bitcoin bought and sold during that hour? So let's say Bitcoin went up during that hour, right? The 1 hour the 1 hour indicator would indicate to buy because Bitcoin is going up. So it would encourage you to buy, right? But on a 6 hour level, you could look at the entire 6 hours beforehand and you could see that Bitcoin has been going down overall for 6 hours, and only in the last hour it went a little bit up. But you can see that the overall trend over 6 hours is down. So the 1 hour indicator can show that it's going up, but the 6 hour interval can show that it's going down. Right? And even if 6 hour is down and 1 hour is up, the 1 minute or 10 minute could both be up as well. So it could be up in the last minute or 10 minutes, it could be up, but in 1 hour, it was down, but over 6 hours, it could be up. So the point is that in over 2 days, it could be down again. So the point is that the interval is the dependency on whether the indicator says whether it's to buy or sell.
Yeah.
And so overall, when you take the 28 different indicators multiplied times the tons of different intervals that we're using, and we're using probably another 10, 15 intervals, you end up with over 200 different data points. Right? So we can review and check all of these 200 data points very quickly. It typically would take, 10 to 20 minutes, right, per asset. So all of these data points can be reviewed in 10 to 20 minutes per asset. But again, if you have 7 different assets, it would take a couple hours. And if you're doing that every single day, it gets overwhelming. So in the context of just like, any particular day, we would focus on only the priority assets, right? So typically we'd only do 1 or 2 per day. But technically it's possible to do all of the assets and rebalance all of the assets all at once, in which case you're doing these 200 data points on every single asset. So let's say you have 5 assets with 200 data points, you're ending up with over 1,000 data points. Does that make sense?
Yeah.
Okay. So overall, there's 2 methods to rebalance our assets. All right. And again, just to make sure it's clear, our goal is not to even we're not even trying to guess what the correct amount and strategy is to either buy or sell. Like in our entire model for Canopy, there is no part of it that's like, oh, we think that Bitcoin's going to go up, and so we're going to buy. That's just not what we do. Does that make sense?
Yes.
So instead, what we do is we take hundreds of indicator data points and we average them all out, and we just slowly are changing how much we're buying and selling to stabilize the total amount of money that we have overall. Okay?
Yeah.
So there's, do you have any questions on this indicators, intervals, data points. Do you have any questions on that?
No question.
Okay, cool. All right. So overall, there's two methods to rebalancing our assets. The first is obviously the automated trading, and the second is the manual method. Right. So with the vast majority of our money, it's really all manual. But even with the manual method, we still typically will add what we would call automated stop losses. All right. So a stop loss is basically like once you make a trade. So let's say you have base US dollars. So you want your US dollars to go up in value. If you buy Bitcoin, if Bitcoin goes down, you're losing money, right? And if it goes down a lot, that's not good. And if someone's sleeping, or basically we're all busy working on Stop Coronavirus Global campaign or some other community project, and Bitcoin's crashing, we would add, even with our manual methods, we still add in stop losses so that it automatically sells to prevent us losing more money. Does that make sense?
Yeah.
So when we talk about a manual method, it's manual in terms of the calculations and the rebalancing, right? But the actual stop loss is still automatic. I mean, there's still an automatic component of the manual method, but the stop loss doesn't actually then re-engage. It just stops and then it's over. Okay, that makes sense?
Yeah, so we can use both methods at the same time?
No, we only do one or the other. So the automated trading, basically, so here we there's over 200 possible data points with all the different intervals. There's really more than 200 data points, but there's over 200 data points in all the different intervals and indicators. So with the automated trading, what we do is we take like 10 to 20 of the most important ones, and then we set up all the different bots to automatically trade up and down based on the different data points and interval indicator models, so that it automatically is rebalancing all the assets for us. Does that make sense?
Yeah.
So you create an account, you add up 10 to 25 different bots on the account. Each bot is selling and buying at different times based on different indicators, right?
Mm-hmm.
So many times those bots will be buying and selling just all day long, like many times. Some bots are slower, will only buy and sell once a week or once a month or whatever, but other bots buy and sell all day long. So basically, this model automatically rebalances your portfolio, right? It's much harder to set up, and it only has 10 to 25 different data points. So it's much less detailed. All right, so if you think about with the manual method, we have over 200 data points. So it's as much as 10 times more balancing and stabilizing effect if you do it every day. So the best thing about the automated training is that you don't even have to do it every day. Once you get the automated trading set up, you just leave it. On our current model, you need to still check every 2 to 5 days to make sure the bots don't shut down. So every once in a while the bots will shut down, and you have to restart them, which is basically because we are limited on our technology. Like if we had someone working with us who is good at technology, or we get the help, eventually we'll set up our bots and they'll never ever stop, right? But right now they shut down every couple of days. So but in order to reset up to make they're not shutting down, it only takes 10 to 15 minutes. So 10 to 15 minutes checking in on our bots every 2 to 5 days. It's very quick. You just log on. We could do it together, and then boom, you make sure the bots are still active. You click a couple buttons, and then you're done. And then it's good for another few days. Okay?
Okay.
And sometimes it's good to restart the system and make sure that it's getting back up and running so that it's going to last another 5 days. Okay, so that's the automated trading. So even with the automated trading, remember, and this is where the balancing and the stability comes in, right? Let's say Bitcoin is going down, right?
Mm-hmm.
We still might buy 30% of our asset value might be in Bitcoin, and then 70% would be no position or sold, right? So when you're automatically buying and trading, it's like going up and down and changing over time. And like, a couple days or weeks later, it could be 60% in Bitcoin and 40% in US dollars instead of 30% Bitcoin, 70% US dollars. So again, it doesn't matter whether you're going up or down. You typically never ever put all of our money 100% in Bitcoin or 100% US dollars. You're always just constantly, shifting and changing the amounts to stabilize it. All right. So it's like the more money we put all 100% into one thing, it's very, very high risk. By only putting half of your money in, you're reducing the risk by half, right? And then you're actually lowering your risk point. You're not going to get as many gains or potential gains, but you actually reduce your risk and your losses, so it all balances out. Because again, our goal is not gains; our goal is stability. Are you good? Does that make sense?
Yeah.
All right. So any other questions on the automated trading model or method?
So just let's say when the bots shut down, do we lose anything? We just reactivate them, then we continue from there. There's nothing we lose.
Yeah, I mean when the bot, for example, I was saying before, like we haven't checked on the bots for like over a week because I was like sick and just not feeling well, like
Yeah.
And it was like over a week we didn't even check on them. So we could have lost 10,000, 20,000. I mean, who knows how much money we lost? We could have gained. We don't know either. So the point, we don't even know unless we do the calculations, right? Does that make sense? So it doesn't matter what trades we're doing. We can basically theoretically think that we're making money, but we just have no idea unless we do the calculations. Right?
Okay.
Yeah, and overall, the automated trading to set up the 10 to 25 different bots takes lots and lots of time. I mean, it takes like days and days and days to get them all set up correctly, and then they won't work right. You have to keep tweaking them, and then you're losing money anyways. I mean, it's very, very, very difficult to set up all the bots, right? So overall, the bots are a good model, and we like the automated trading bots. But let's say you wanted to create an automated trading bot that was equivalent to the manual method. It could take years to set up 200 different bots with 200 different data points that are all buying and selling and trading at the correct times and have it all work, because once you get more than like 5 or 10 bots, it slows down the whole system. And when you talk about 20, 25 bots, it really is slowing down the system, especially when you multiply that times the dozens of accounts we have. And then next thing you know, it's just like a disaster, right? Most of the accounts we have, we only have a couple bots on. So when we do automated trading, we try to set up, 10 to 25 different bots, right? And again, the reason is because each bot, when it buys and sells, nobody knows whether or not that's going to be a successful trade. It's impossible to know for sure. And again, our goal isn't gains, our goal is stability. So by doing 25 different bots, all buying and selling at different times, we're balancing out. So if one bot loses money, another bot's gaining money, and then it all balances out overall. Okay?
Yeah.
All right. Any other questions on the automated trading and portfolio rebalancing?
No more question.
Okay, so let's go to the manual method. So the manual method, although the automated method is our goal, like our long-term goal is the automated method, but anytime our bots break down, like even if let's say we spent 2 or 3 years getting all the bots perfect and everything's perfected and everything is looking good, right? It's snap of a finger, everything can break down and all of your bots can stop working, or they just don't work anymore, like the algorithms don't work for the current market, and it just becomes a disaster. You go right back to the manual method. The manual method works. It is truth safe. There's basically no way that the manual method will be bad. Like it's almost foolproof, right? So, it has, if we do it correctly, we do it daily or even multiple times a day for any particular asset, you are talking like really good stability and very low risk. Like we can take very volatile systems and really bring low risk into those systems with the manual method. Okay, and the reason why that's true is because we take 200 different data points. So what I want to try to get you to understand is when you have automated trading and rebalancing, you have 10 to 25 different bots all buying and selling constantly at different times, all the time, every day, all the time, right? But at any one particular time, you look at all the bots and you only have one overall specific calculation. For example, 30% Bitcoin, 70% US dollars. So even though you have 25 different bots, if you add all of those 25 bots together at any particular time, there's an exact number of Bitcoin that is held and an exact number of US dollars that's held. Right? And then that can change. A week or two later, it can be 60% Bitcoin, 40% US dollars, right? So if Bitcoin's going up, you're going to be buying more and more Bitcoin, right? So it slowly changes around, but at any moment in time, even though you have 25 bots, you can average them all out, and it averages out to a single trade of either 30, 70, 60, 40. Does that make sense?
Yeah.
So the manual method does that. So the manual method, all the manual method does, it takes 200 different data points as if you were doing 200 separate bots that are all trading simultaneously on their own, except we calculate all of that in a spreadsheet, and then you take all those data points, you average them all together, and then you end up with the same outcome that maybe the automated trading would have done, usually much better than the automated trading, and then you still end up with 30% buy, 70% sell. Right? So again, in the end, the calculation that we're doing is a percentage. So it doesn't matter how much money we have, whether it's $10,000, $100,000, $1 million. We're just saying 30% of our money is going to go in Bitcoin, 70% of our money goes in US dollars. Done. Right? And instead of doing 25 separate bots that are all buying and selling constantly, we'll just do one single trade to rebalance the total money based on all 200 data points. That instead of them all being their own bots, instead of having 200 separate bots, we have 200 data points that we just average. All right. So again, for these, you only need a single bot for the entire account. Sometimes we have a couple different bots to stabilize the stop losses, right? But then we manually set the amount based on the 200 data points. If we do this daily, it's much more accurate than the 10 to 25 different bots. Right, but the problem is that it's manual, so you have to do the work every single day.
Yeah.
And the ability for us to set up those 25 bots is a huge amount of work. But to do 200 bots is just it would take years to be able to even understand some of the indicators. Like these indicators, like I only understand like 3 or 4 indicators really, really well, right? That I myself really understand. When you're talking about 28 different indicators, like to even understand some of these indicators is almost impossible without years of expertise, right? So we just accept the experts. We say, okay, we take all 28 of these indicators. These are the best ones. Here they are, and we just average them all out, and we don't even need to know what they are. All that we care about is whether it tells us to buy or sell. Okay?
Yeah.
All right. So again, the manual method's much more accurate. But the only problem is it has to be done every day. There's no way around this except to either create our own bot that does all these calculations for us and then automatically does the trade, which we would have to pay a coder to organize our own bots for us. But eventually one day we'll be able to get closer and closer to making our manual method more and more automatic. All right?
Yeah.
And again, as I mentioned before, even with the manual method, we still set up the automatic bot losses, because if we only do it once a week, let's say we do the manual method once a week or even once a month, right? Right now, we're not even doing it once a month, right? So if we did it once a week or once a month as opposed to daily for any particular asset, you add in the stop loss so that if the stop loss triggers, sometimes there could be very, very large losses, and that would prevent us from getting large losses and just help stabilize the assets. Okay?
Okay.
Do you have any questions on the manual method?
No.
All right. So overall, the manual method's pretty simple. You're just checking each indicator, whether it says on each interval, whether it says to buy or to sell. And then you just average it all out and calculate it. And I'll show you, all the calculations are basically done automatically. You just have to say whether the indicator says to buy or sell. So it's actually quite simple, and it goes really fast. It only takes 5, 10, 20 minutes to go over it. And we'll go over that next time. All right, so are there any questions overall on calculating the trades and portfolio rebalancing?
No question.
All right, so we already covered transfers and money organizing. Let's see what else we have here. Reminder, the primary work is calculating gains, losses, and recalculating rebalancing of the assets, right? So that's basically the work that needs to be done for Canopy. Once we train you guys, you and Pressy, to do this, you guys can do this on your own. You'll be able to go and calculate all of it, see whether or not we should buy or sell, compare it to the day before, and then you can say, hey, Jay, we did the calculations, and the calculations say that you don't need to do any rebalancing, and then we don't do anything. And then the next day you can say, oh my God, there's been major changes in all of the calculations. We need to, buy this many Bitcoin and sell this many percentage. So Bitcoin went, from 40 to 80%, So that's how all of that works, okay?
Yes.
All right, so, and then of course we'll be communicating, tracking, but most of the Canopy work will all be VA session work. All right, so base value, we already covered base value. Does that make sense? You understand the base value?
Yeah, I understand.
I'll review it again. So base value Bitcoin can only have gains if the amount of Bitcoin goes up, right? So let's say you start with, basically if you have 2 Bitcoins, in order to have gains, you have to have more than 2 Bitcoins. Does that make sense?
Mm-hmm.
So
yes.
if you start with 2 Bitcoins and Bitcoin goes up in value from $10,000 to $15,000, do you have gains of Bitcoin?
Mm-hmm. Yeah.
No. The answer is no, because at the end you still have 2 Bitcoin. Right? So let's say you have 2 Bitcoin, and those Bitcoin, you're in base Bitcoin, and those Bitcoin go up in value from $10,000 to $12,000. Right? The US dollar value of those Bitcoins went up, but the actual number of Bitcoins didn't change. You still end up with 2 Bitcoins. Do you understand?
Wait, if the number of Bitcoin doesn't change, remains constant?
Yeah, so if you're in base value Bitcoin, you can only have gains. There are only gains if and only the amount of Bitcoin goes up. So if you start with 2 Bitcoin and you end with 2 Bitcoin, there's no gains. Right?
Oh, okay.
So, for example, you can start with 2 Bitcoin, end with 1.5 Bitcoin. Bitcoin can go up from $5,000 to $7,000, and you could lose Bitcoin and have losses, right? So the value of Bitcoin can go up, but you can have less Bitcoin at the end, and then you actually have losses. Do you understand?
Yeah.
Okay,
yes.
so again, if you have base value Bitcoin, you can only have gains if the amount of Bitcoin goes up, and you have losses if the amount of Bitcoin goes down, regardless of whether the value of the Bitcoin goes up or down. All right, you understand?
Yeah.
So with base value with US dollars, you can gain simply by Bitcoin going up in value, right? So if you have US dollar valuation as a base value, then if your Bitcoin goes up in value from 10,000, 12,000, it's just you have gains. Okay?
Yes.
So let's go through this last example to make sure you understand. So Bitcoin is going to, so you think that Bitcoin is going to go down in value, right? So you currently have 5,000 Bitcoin, 5,000 per Bitcoin, and you think that Bitcoin is going to go down in value, right? So you buy 5 Bitcoin worth of US dollars. So you currently have 5 Bitcoin. You think it's going to go down in value. So instead of holding on to your Bitcoin, you buy US dollars, right? And you hope that Bitcoin will go down in value. If Bitcoin goes down in value, then you would be able to rebuy more Bitcoin with the US dollars, right? So at that point, you still have 5 Bitcoin. You have 5 Bitcoin worth of US dollars, and in this case, it would be $25,000. You understand?
Yeah, 5 times.
Then the value of Bitcoin goes up, and then Bitcoin goes up to $7,000, right? So that would be a gain in US dollars of $7,000. But what about in relationship to Bitcoin? So
it will be a loss for the Bitcoin.
And how much of a loss?
$2,000.
2,000 US dollars, exactly. So if you lost $2,000 per Bitcoin, what would be your total losses?
Oh, it will be 2,000 times. Okay, that will be 10,000.
$10,000, right? So you have 5 Bitcoin. You were hoping that the Bitcoin was going to go down in value, so you changed your Bitcoin to US dollars, and then the Bitcoin went up in value, so then it went up by $2,000 per Bitcoin. So because you no longer have the Bitcoin and instead you have US dollars, you actually lost $2,000 per Bitcoin, which is a total loss of $10,000, even though Bitcoin went up in value. All right, so at the beginning you had 10 Bitcoin, right? You sold, you basically bought 5 Bitcoin worth of US dollars, right? You kept the other $5 Bitcoin in Bitcoin, right? So that Bitcoin went up in value. So if you take all of that, you end up with 8.75 Bitcoin at the end, right? Because then at the end you take your $25,000 and you rebuy the Bitcoin, so you end up with 8.75 Bitcoin, and the total losses in Bitcoin is 1.25 Bitcoin of total losses in the relationship of the original 10 Bitcoin, right? So even though Bitcoin went up by $2,000, you end up with your calculations, you have a loss because we were in base Bitcoin. All right?
Yes.
So if your base was US dollars, then you would have gained. How much would you have gained? So if you think about it being in US dollars, you would have started with 10 Bitcoin at $5,000. You start with $50,000. You would have bought 5 Bitcoin, right, at $25,000 a Bitcoin. You would have kept $25,000 in US dollars, and then the Bitcoin would have gone up to 7,000. And if you do 7,000 times 5, it's 2,000 per Bitcoin, which is a gain of $10,000. So it's exactly the same situation where you have 5 Bitcoin worth of US dollars and you also have 5 Bitcoin. If you're in base US dollars, you would have gained $10,000. So again, the base that you're in is the determining factor of whether you have gains or losses, right? So in the case of the base Bitcoin, you have a losses. In the base US dollars, you would have gains, right? So it really just depends on all that. But what that also shows you is how by balancing your portfolio and only selling half of your money instead of all of your money, it stabilizes everything. Because otherwise you would have even bigger gains and or bigger losses and problems if things went bad. Cool. All right. So do you have any other questions? Do you understand the idea of the base value? And do you have any other questions related to anything? Because that's basically it as far as these initial...
A question on how are we getting the 8.75 Bitcoin?
Okay.
Yeah.
So
and the loss of one...
Yeah, this is really simple. This is simple. So you have 5 Bitcoin worth of US dollars. So you have $25,000. Okay, so then Bitcoin goes from $5,000 per Bitcoin to $7,000 per Bitcoin. So at the end you end up with 5 Bitcoin plus $25,000. So if you turn your $25,000 back into Bitcoin, you would take $25,000 and then you would divide it by $7,000 per Bitcoin, and you end up with 3.5 or so Bitcoin.
Yeah.
Right. So then you add your 5 Bitcoin to that, so you end up with 8.57 Bitcoin. So maybe I did this wrong. It's not 8.75.
Yeah,
It's 5.7.
8.57.
Yeah.
Yes.
So I just put those numbers wrong. But anyway, so if you originally had 10 Bitcoin and you end up with 8.57, you end up with 1.43 of losses.
Yeah. Okay.
Yeah, and that's exactly a reason why we need more than one person looking at all the calculations, because it's easy to make small mistakes like that, which can change the total percentages and all of our strategies and everything. Good catch. Coolio. All right. Any other questions?
Oh, no.
Cool. So, I mean, I know this is a lot of details, but that's why we do this separate training session to kind of go over the vocabulary. This is 90% of the vocabulary we'll be using all the time. It's basically the same vocabulary, just to hit the big ones. Base value, right? We're talking about portfolio rebalancing, gains and losses. We're talking about, basically double gains, normal gains, neutrality, losses, double losses. Those are all very important vocabulary terms. And then we're talking about indicators, intervals, buying, going long, hold, no position, sell, short, data points, automated trading, manual method, right? Percentages, buying and selling, percentages, stop losses, right? So those are the main vocabulary terms that we're going to be talking about over and over and over and over again. All right. So when we actually schedule our next session, or you check in the future, instead of just talking about this, we'll actually jump right in. We'll go into the spreadsheets. We'll do calculations. We'll do live trading and actually rebalance the assets, and we can just do it. So next time we'll actually be right into it and actually start working with the assets and the spreadsheets. Okay. And again, we're going to be focusing almost exclusively on the portfolio rebalancing. And until we get all the portfolio rebalanced and get all the trading stabilized, it doesn't even make sense to be even starting to doing the calculation of the gains and losses, because the calculation of gains and losses, it can take weeks to months to even be able to do that. But we can be starting to track some of the current values. So every time we go in and we rebalance, we track what is the current amount of assets there, which is accounting. So we do accounting while we're rebalancing, and then we go back later and actually calculate the changes in the amounts.
Yeah. Now I understand when you say work is not done on the Canopy. So this should be just a frequent thing, just do it on a daily basis.
Yeah, I mean, this is also like, 1/100th of everything that goes into Canopy. This is a very small aspect of it. But the thing that you don't really understand yet is that doing a trade and doing a specific, let's say you're doing $5,000, $10,000 of trading is not a big deal at all, right? The problem comes in just the enormity of the amount of volume that we're dealing with. So instead of just dealing with 1, 2, 5, 10 bots, we're talking about, for a single account, we're talking about dozens and dozens of accounts, right? At least a half dozen to a dozen different assets, right? A half dozen to a dozen different base values, right? So then when you multiply all that together, you end up with tens of thousands of variables that are all simultaneously changing, and it's just insane, right? So so it's really the volume of dealing with the hundreds of thousands of dollars all simultaneously. That's what makes it overwhelming, right? So if it was just, one single account with one set of stocks, or just Bitcoin and just like $10,000, $20,000, I would be able to deal with it myself. It wouldn't be a problem. The reason I can't deal with it myself is because it's like so much more than that. It's like 100 times more than that, or if not 200 or 300 times more than that. So it's just the sheer number of accounts in cyber currencies and all the trades. It's pretty insane. So anyways, with a couple people and getting a team together, we can do it no problem. I mean, it won't be that hard to do. It just takes a little bit of effort every day to keep track of it and then stabilize everything. And we I feel like the models that I put together, I mean, it's taken me years and years to develop these models. And I think they're going to be very successful and really, really help us stabilize everything. And then once we stabilize everything, we can make gains, and then we can make double gains. So I'm very confident that this is going to work, and that we can, who knows? If it works and everything goes great, we'll all be loaded. We'll have a lot of money. I just wish that we could have found people to work on this with me years ago instead of waiting until now. But whatever, it is what it is. So if we can get this stabilized now, it'll be better than later. And then from there, even the work I did by myself over the last couple of years has been extremely successful. I mean, I've successfully increased our overall net asset value by many tens of thousands of dollars, if not close to $100,000. I mean, who knows exactly what the amount is because we don't calculate it. But overall, everything's going the right direction. It's relatively stable overall. But when month to month, it's a disaster, especially the last 2 or 3 months when the whole system crashed, right? So we just weren't ready for that. We should have been ready, but it's like I just couldn't handle it myself. It was just too much. I tried and I wasn't able to. Yeah. Cool. All right. Any other questions or?
No.
No. All right. I think we are done then. So let's just go ahead and check in our next session, whatever, tomorrow, the next day, whenever it is. I think we're done for today.
Yeah, tomorrow.
Cool.
Should be tomorrow.
Nice. And
so
definitely.
Do you have another question for J-Life support? J-Life network support?
I mean, I don't know. I mean, it's fine just to reschedule for tomorrow, or we could do it later if you want to. But I need to talk to the hemp group, right? And work on the partnership, right? The partnership and collaborative company. So I might not have time today. You're welcome to check in, but it's again, if we do, we want to schedule JLN support and just focus on the computer organizing because that's the main thing holding you back.
Did you fix your computer? Actually, just to check on your computer.
Well, no, we need to schedule and go through it in detail because it's just like, yeah, let's just schedule JLN support, and then if that happens, it'll be great.
Okay, fine.
Cool. Awesome. I'll talk to you soon.
Yeah, thank you. I'll update Gracie. Then just upload the video. I'll just put the audio.
Yeah, well, I have the video. I just recorded the video, so we just need to. You need to remind me to upload it and then get the link.
Okay, fine.
So we can add that to the priorities list, all right? Yeah, and then that'll be available for you and Pressy to review whenever you need to, if you need.
Okay.
Yeah. All right. Cool. I'll talk to you later.
Thank you.
All right. Bye.